We are live from Bloomberg's world headquarters in Midtown Manhattan. I'm Matt Miller.
And I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up as summer gets underway, investors try to shake off the crypto winter. We'll speak with Charles Cascarilla, CEO of Paxos, a blockchain infrastructure firm.
And Alyse Killeen of Stillmark is among the venture capitalists who are doubling down despite the recent turbulence. We have the data on the big bucks flooding the industry.
Plus, new moon Luna is trading again on a digital asset exchange. Details on the revived token ahead.
All right, that is all ahead, Matt, but let's also take a look at how some tokens are moving today. No surprise, as risk-on sentiment has gained some steam. You are seeing gains really across the digital currencies. Bitcoin, of course, was gaining steadily over the long holiday weekend here in the U.S. It is once again today up about 3%. We're trading around $32,000 on this last trading day of May. But remember, it started May around $38,000. So we're still down pretty significantly on the month. You have Ether and XRP each up in the ballpark of 1 to 2% as well. But really the outperformance is coming from Cardano. This one's really interesting. They are expecting to have an upgrade to their blockchain in the month of June, a hard fork that could increase its scalability, lower transaction costs, a lot of optimism around that. It's up 15% to around 62 cents and now actually has a larger market value than that of XRP, Matt.
Bitcoin has a bigger market value than almost any other coin right now as a result of what happened in May. This chart was put together for me by Dan Curtis. He's a financial genius, but I didn't realize he knew anything about crypto. It's so cool. In white, you have the Bitcoin to Ether ratio, and in blue, you've got the S&P. And what it looks like is that when the S&P does well, Ether is worth more compared to Bitcoin, but when the S&P does poorly, Bitcoin is worth more than Ether. So it kind of paints the picture that Bitcoin is somewhat of a safe haven, at least compared to Ether, and certainly compared to other coins as well. Now, 2 years ago, Guggenheim Scott Minerd predicted Bitcoin would be a sincere safe haven, up to $400,000 a piece. But last week in Davos, he made a big shift. He's now predicting, even from here, a massive plunge.
We were probably going to hit $8,000 before.
What was that number?
8,000 until we totally flush
So you
out
have
what's
no
going
more
on.
holdings?
No.
Okay,
I mean, if I were, I'd be short.
Joining us now is Charles Cascarilla, co-founder and CEO of Paxos, a blockchain infrastructure firm. Charles, thank you so much for being with us. I'm wondering what your take is on Scott Minerd's take, which is that crypto has not yet become a credible institutional investment.
Well, I think we're still in the early adopter phase right now. And that's a process, and you're going to go through ups and downs. But the key thing is to look at the fundamentals. And so certainly the price moves and we can react to it. But it doesn't change the validity of what the underlying technology is about. Just like the internet didn't change because you had the dot-com bust, the value of it, and how it transformed our lives. I think that's exactly the same thing with crypto and blockchain. And so when the price of Bitcoin goes down, of course, we all talk about it. And I think there's good reasons to have conversations around what the price is doing. But the fundamentals, which is how many people are adopting this technology, are continuing to really shift in a positive way. Maybe only a couple of years ago, you were at tens of millions of people. Today, you're at hundreds of millions of people. And I think if you look in 2 or 3 years from now, you'll be talking about billions of people. When we look at the number of partnerships that we're powering at Paxos, that's what it indicates to us.
I mean, I've been through many crises. I bought my first Bitcoin in 2013 for $600, and it hit 1,000 shortly after and then went down to 75. Is this, you think, Charles, what we're in the midst of right now, still an existential crisis? Is that still happening to Bitcoin, or is this just a price crash?
Well, it's always hard to tell. In hindsight, we'll know the answer. But I think the reality is you have these crypto corrections because you have such big booms, too. And then you have to clear the decks. You have to have some creative destruction. You have to have a winnowing of good ideas and bad ideas. And I don't think that takes away from the validity of Bitcoin when you have the price go down and you have a washout, just like, for instance, with Amazon, the stock went from $100 down to $2. It didn't change how important Amazon was going to be to the world. And so I think that's the type of perspective we have to have here. You're going to have big price moves, and sometimes they're going to be painful. It's not always going to go in one direction.
I'm glad you brought up Amazon. I remember during the dot-com bust, a friend of mine was adamant that he was holding Amazon, even though everything else in his portfolio went basically to zero. Is that what we're going to see shake out in the crypto world? Because as I just showed you, Bitcoin seems to be somewhat of a safe haven. It shot up again in terms of market cap to almost 50% of total crypto market cap. Everything else, and there's a lot of everything else, right? Like 20,000 other coins dropped.
Well, look, I don't think they're all going to go to zero, but do I think that a lot of those projects are not going to have the staying power through a correction? Really, I don't. Because part of this process is you want to try a lot of different things, and then it's going to get narrowed down to the ones that are really working. And I don't know what the number is that we'll end up with, but it's certainly be less than 20,000 coins. On the other hand, you can't pick which ones are going to exactly work. You have to allow the product market to just continue to iterate. People to keep using it, try different things, because there's so much technology that is still being developed here, so many communities that are still forming.
Well, it's still being developed and it's still being regulated. That is a work in progress, Charles. And on the subject of regulation, I want to remind our viewers of some remarks we got from Fed Governor Lael Brainerd last week, who said the recent turmoil in crypto financial markets makes clear that the actions we take now, whether on the regulatory framework or a digital dollar, should be robust to the future evolution of the financial system. And of course, Charles, Paxos has Pax Dollar, USDP is what you call it. It is a regulated stable coin. How do you see that coexisting in a world where a real federal digital dollar might also exist?
Well, we've probably invested more in regulation than anybody in the space. We were the first company to get a trust company in the state of New York back in May of 2015. We did this deliberately because my viewpoint is we're going to create mainstream adoption. And how are you going to do that? You're going to do it by being trustworthy, by having oversight. And the idea that you can get a societal-wide impact without regulatory oversight, to me, is being actually short-sighted. And so what we did is go and invest on having a primary regulator, someone who oversees us and our tokens. So USDP and BUSD. We also have a gold token, PaxG. All of them are regulated tokens, and Paxos itself is regulated. And so the idea is that we want to be indisputably the safest institution to use to build your infrastructure on, and to be able to say that, what happened with Terra cannot happen at Paxos. You cannot have that type of fundamental flaw in our product set.
But is your idea, Charles, that the existence of something like USDP means that we don't actually need a CBDC here in the U.S., a digital dollar?
Well, look, I think if we get to a point where we're going to have societal-wide outcomes, the Fed is going to be issuing in some way. What way, we don't know exactly. And the reason I'm saying that is because no one really knows. The products are still very new. The technology is new. The privacy controls are all new. Where do we get to that point? Our goal here at Paxos is to re-platform the financial system, to take $600 trillion of global assets and put them into a blockchain. And so I think dollars are probably the most important part. There's $60 trillion of zero maturity around the world that people want to use. They want dollars. They want them to move at the speed of the internet. And that's the key thing. People want dollars that move like the rest of their lives move. And right now they don't.
Yeah, I mean, there are a lot of people who don't want dollars because they're not decentralized, right? They can easily be censored, as we've just seen quite well illustrated with Russia. Is PaxG a better solution to that? Because it seems like that's the ideal decentralized cryptocurrency that isn't likely to have the kind of crash we saw, the kind of catastrophe that we saw with Terra.
Well, it's an interesting question. I call it the lingua franca of the financial system, so to speak, is dollars. It's what everyone uses. And so now that may shift. And it could shift because another currency comes around, like, say, the digital renminbi, which has been talked about. It could switch because people decide to use Bitcoin. It could switch because they decide to use tokenized gold. We don't really know exactly where it's going to end. But I can tell you right now, when you look at the crypto ecosystem, everyone trades against dollars. And if you look at people around the world, the average everyday consumer, say in Argentina or even in Asia, what they want is digital dollars. And that may shift, but I don't think it's happening today or tomorrow. It could happen, though, and we could become the Rust Belt of financial services here in the U.S. if we don't adopt this technology. I think that's the key point. We have to make sure that we're incentivizing people to operate here in the U.S. because we create the right regulatory framework, and it doesn't end up becoming something that is driven offshore.
Charles, absolutely fascinating stuff. I'm really glad we could get you on today. Charles Cascarilla there of Paxos talking to us about the Pax dollar and Pax G as well. Coming up, Alyse Killeen, founder and managing partner at Bitcoin-focused venture firm Stillmark.
And how a crypto firm is supporting the Ukrainian army through this year's Eurovision winners.
Plus, to access all the latest data and news on crypto, if you have a Bloomberg terminal in front of you, just type CRYP GO and you'll see that we continue to update that data. This is Bloomberg.
I think it's just the beginning of crypto winter, to be very honest. And I am very surprised that people are expecting that it's going to continue to hover around 30K. I do expect it to go down to somewhere between 14K, 18K, maybe 22K as a stable point. But remember, we have seen this in the past 2 times. This is nothing new, right? Every time it goes up to an all-time high, there is a point when it comes down to and find a new lower point as a base point to.
All right, now, despite the crypto winter chill, a number of venture capitalists, of course, still staking their entire reputations and investment strategies on crypto. Sonali Basak is following the money for us. Sonali?
Yeah, absolutely, Matt. It's time to talk about what happens in a downturn, in a string of hiccups, hacks, plunging prices, and this month's Terra collapse have left investors nursing a lot of large losses, including in the world of venture capital. Some VC investors are looking past the recent rout and see a lot of promise in the industry. Andreessen Horowitz says it raised a $4.5 billion crypto fund, and that's the largest to date. We've seen 6 other $1 billion crypto funds raised in the past year alone, representing about $10.7 billion collectively. The fund, the 4th crypto-dedicated investment vehicle for Andreessen Horowitz, brings its total digital asset-focused efforts to $7.6 billion. The firm has backed some of the biggest names in blockchain, including Coinbase and NFT marketplace OpenSea. Andreessen Horowitz Big Bets puts it at the top of the list of crypto funds, but the firm's influence has proven controversial. Remember when Jack Dorsey sparred on Twitter with Mark Andreessen and Chris Dixon last year over whether Web3 is as decentralized as supporters claim? While this new fund might not be enough to convince the critics that Andreessen Horowitz has crypto's best interests at heart, it does show that VC interest in crypto is alive and well.
All right, great breakdown, Sonali Basak. Thank you so much. Joining us now to discuss this further is Alyse Killeen, founder and managing partner at Bitcoin-focused venture firm Stillmark. Alyse, is a crypto winter a better or worse time to be investing in crypto companies?
It's probably a worse time to be investing in crypto, but Bitcoin is different. So Bitcoin and crypto are categorically different things. And Bitcoin companies historically have really thrived in crypto winters. It's a time to build, it's a time to be focused on sound tech, and Bitcoin is that.
So, I mean, we've seen Bitcoin moving back towards the lion's share of market cap. It's so fascinating that Bitcoin can be, I think right now, 45% of the market cap of all crypto, and we're talking about 20,000 some coins. Is this not an existential crisis?
For crypto?
For Bitcoin.
Currencies?
For Bitcoin.
For Bitcoin. So I think that Bitcoin's mascot is the honey badger. And what that represents to the community is that Bitcoin as a sound tech sort of hasn't cared about what's happening around it. It operates very independently. And in fact, that's the purpose of the protocol. Bitcoin was invented, it was emergent of 2 decades of work on how to build an open and fair financial system that could serve the underbanked and the unbanked in the same way that it served the wealthy and privileged. And so Bitcoin and Bitcoin builders are generally really heads down. Now, I think something interesting that's happening today that you see reflected in the markets, in the crypto markets and in the Bitcoin market, as well as in the broader macro environment, is that there's a collision of 2 things. Bitcoin is cyclical. Its cycles have been historically driven by halvings that affect miners And so we see about a 3 to 4 year cycle for Bitcoin, which has an impact on the rest of crypto, of course. But now we've also seen a macroeconomic downturn, and Bitcoin trades as a risk on asset currently. I think that over the long term that will change, but today that's the case. And so these forces are at play in how we see what we see happening with Bitcoin's volatility. However, if we look back historically to 2008, and another example of a challenging macro environment, what we saw then was that new paradigms introduced by cloud and mobile were really powerful tailwinds for fledgling companies.
Are we going to see, by the way, Alyse, any new way of, is proof of work going to be a thing of the past, or is it still the only trustworthy way to maintain the blockchain?
Proof of work is a thing of the future. So it's the only trustworthy way to maintain a decentralized and fair payments and financial system, and that's Bitcoin. But the economics of mining, the economics of proof of work, incentivize investment, major investment in sustainable energy. We know that today the sustainable energy represents about 58% of all energy used for mining, and that's a 60% year-over-year growth, so 60% increase from Q1 2021. Now, the fact that Bitcoin mining has been able to so quickly transition to a sustainable energy source as the dominant source, I hope will be an example for other sectors to follow.
So, Alyse, what kind of company, is it mining or something else, are you looking to invest in right now?
Well, we're looking at a couple things. So as I said earlier, I expect that Bitcoin and Lightning Network can replicate the opportunities that mobile and cloud provided in 2008 for founders. And so these new paradigms introduced can help drive and create great opportunity, greenfield space really, for motivated founders. And so we're looking for folks that really know how to go heads down and build and create sustainable value for end users. What that means in Bitcoin is twofold. First, we're looking at Bitcoin BTC, the asset, become further financialized, and Stillmark is investing there. And then second, we've seen a really rapid adoption and integration of the Lightning Network into various sorts of forms of payment. So we've seen, of course, remittance. We're seeing gaming companies integrate with Lightning Network for peer-to-peer payments. We see Bitcoin rewards, and all of that happens on the back of the Lightning Network. And so a lot of venture capital dollars are focused there.
And what kind of valuations can founders demand to get from venture capital players in this kind of environment, which, as you say, a macroeconomic downturn in theory isn't great for Bitcoin? In theory, that could make it harder to raise money.
So one great thing about the Bitcoin space is that because Bitcoin is cyclical and founders have the experience of going through cycles more rapidly than a traditional tech founder might, Bitcoin companies tend to be prepared for war at all times. They develop a war chest, they have a plan for how to get to break even as a company, and they're never expecting access to easy capital. On top of that, different from crypto, the Bitcoin field has been undercapitalized. Startups in the space have sort of never been exposed to really hot valuations. And I think that will be an advantage for founders going through a macroeconomic downturn.
What about, Alyse, what about talent? You know, Sonali has done a lot of work showing that the smartest young talent has, to some extent, left Wall Street and the East Coast to go to, crypto and the West Coast or Austin or wherever the kids, Miami, are going these days. Are they still going to do that after this big drop in the value of the currencies?
They are, and here's why. Bitcoin builders tend to be mercenaries. Tend not to be mercenaries. They tend to be missionaries. And so where you've seen an outflow from Wall Street into traditional tech, looking to make a quick return, in Bitcoin, you see folks looking to make an impact. And so that sort of doesn't change regardless of exogenous variables. So there could be a macro downturn, and you still have the same motivation of folks wanting to drive open and fair finance. the reason why I came into Bitcoin in 2013 was really because I saw the smartest folks, the smartest engineers in the world working in this space. And what they were looking to do was to bank the unbanked and to provide access to a global economy for those who had otherwise been dispermitted from that. And that doesn't change, just because we're in a risk-off environment.
Yep. Alyse, great to get some time with you. Thanks so much for joining us. Alyse Killeen there of Stillmark. Now, coming up, how a crypto firm is supporting the Ukrainian army through this year's Eurovision winners. This is Bloomberg.
This is Bloomberg Crypto. I'm Kaylee Glines with Matt Miller. Now to some of the crypto stories that caught our eye this week. And Luna has begun trading on digital asset exchanges. It's the new token for investors who saw the value of their cryptocurrencies tied to the Terra blockchain wiped out. Earlier this week, the original blockchain was split off and renamed. The new Terra blockchain does not include stablecoins.
Bored apes are feeling the cold. Blue chip NFTs like CryptoPunks and Bored Ape Yacht Club are the latest victims of the collapse in cryptocurrency prices. Despite initially holding value when Bitcoin and Ether prices were falling, the lowest priced item in the collections are down about 50% in the past month.
And a cryptocurrency exchange is helping to bolster the Ukrainian army in their fight against Russia. Whitebit bought this year's Eurovision Crystal Mike trophy from Kalush Orchestra, the Ukrainian rap folk band that won the competition. The price was $900,000. The band says the money will be spent on drone systems.
And Formula One is doubling down on crypto. According to the Daily Hodl, Oracle Red Bull Racing is launching a second generation of NFTs in conjunction with the Grand Prix that happened on Sunday in Monaco. Each piece will be minted on the Tezos blockchain and available on Bybit's NFT marketplace. So that should be interesting, especially since they're number one right now. Red Bull Racing's Max Verstappen has 125 points right now, 5 podiums and 4 wins. So it looks like those are some NFTs that you might actually want to pick up.
Yeah, okay, so Red Bull Racing has come for the NFT decentralized finance world. It has also come to America. Races in Miami earlier this year, and we're going to talk a little bit more about that on the other program that we host together at the 5 a.m. Eastern Time hour, Surveillance Early Edition.
That's
Someone
right.
special will be joining us.
That's right. Kaylee and I anchor Surveillance Early Edition along with Anna Edwards, and tomorrow we'll be speaking with the CEO of Red Bull Racing, Christian Horner. I have a lot of questions for him. Almost none of them had to do with crypto, but it'll be interesting to see because they've done this twice now.
Yeah.
So, they've got experience with this. It's a great way to raise money, obviously.
Totally.
And the fans are going to want them no matter what they're actually worth in the marketplace.
All right, so we might not be talking crypto much tomorrow morning, but we'll be back next week to do it 1 p.m. Eastern Time, Bloomberg Crypto on Bloomberg Television.